Let's talk about the IPO pipeline. There was a bit of a dry spell there for a bit of a while.
I think you're being kind.
It's very dry here in Tianjin today. But the activity has started to pick up of late. Things do seem to be starting to gain traction. Tell us what you're seeing.
Yes, well, I think we've been through 6 or 7 quarters of, oh, it's going to be the next quarter. Oh, it's going to be the next quarter. And finally, it feels like the dam is finally breaking. We obviously had a big food IPO, a quick casual restaurant company. Cava went public in the U.S. a couple weeks ago. This week pretends to be a fairly strong week, as many as maybe 15 IPOs in the U.S., which would be one of the best, if not the best week so far this year, and with some stronger names.
Yeah.
Some of the ones that have gone out so far this year, Sam, have been the smaller companies. Now we're starting to see bigger companies come to market.
And the Chinese specifically.
Well, the Chinese ones will follow the U.S. ones. They weren't going to ever be the leaders in coming to market in the U.S., but they certainly will follow. And we have a very, very strong pipeline. In fact, there's 93 companies publicly filed to come to Nasdaq. 65 of them are from China. So we have, and those are just the public filings. So we have a very, very strong pipeline. I was here in April, and I had 36 meetings in 8 days with prospect companies. So it's really a very strong group of companies that are looking for the public markets in the U.S.
And what sort of sectors are we talking about? Because, of course, a lot of the concerns around this IPO pipeline have been around those companies that hold significant amount of data and personal information. So talk us through the kind of companies that have this sort of appetite.
Well, first of all, you know, companies need capital. And so the biggest source of capital in the world is from investors in the United States. We are, $60 trillion worth of market cap of companies that are listed in the U.S., and the next largest market in the world is $6 trillion. So there's a huge gap between us and the next market. But it's going to be in healthcare. It's going to be in EV, and it may not be EV car companies. We do have VinFast coming to Nasdaq from Vietnam, later this summer. But it will be the other components. Earlier this year, we had Husai, which is a LiDAR company, come to Nasdaq. So it will be those kind of companies. And you're right, it will be more enterprise tech companies that will not touch necessarily the consumer data, but will be companies that need that capital to continue to grow. And it's really important for the Chinese economy in order to get these companies the capital that they need to grow. There's just not enough capital here, and there's not enough risk capital, so we need more and more of it to come into China.
Absolutely, and I'm really curious. Something that I've been covering since sort of day dot has been this auditing dispute that's been ongoing. Have you got any update on where we're at with that?
Well, that really got solved last fall, and I think that was a big overhang. You talk about the dryness of the market. Yes, we have been through this barren winter, and it really was caused by the HFCAA, which was the Holding Foreign Companies Accountable Act coming out of Congress that pushed the PCAOB to make sure that they were doing their audits. Those were concluded about Thanksgiving last year. The PCAOB signed off on it at the end of last year. Went through 4 very, very large companies from China. And so we feel like the path is clear for companies to come. And with that overhanging Chinese companies, they weren't going to come to the U.S. markets for the fear that they could be delisted fairly soon afterwards. With that risk now taken off the table, I think we're in a much better place for companies to want to come to the U.S.